Assalamualaikum. Hi and good day to everyone. My name is NURSHAFIQAH binti Muhammad MIZAN, and this is the list of my group members: Nurdiana, FARAHIN, Muhammad KHAIRUL, and today we will be presenting the financial ratios for 4 companies from telecommunications industry. So this is the 4 companies chosen by me and my group members, which is Astro Malaysia, Media Prima, Digi.com Berhad, and Axiata Group Berhad. A little bit introduction for each of these companies, starting from Astro. Astro is a leading multi-platform content and consumer serving over 23 million individuals in 5.7 million or 76% of Malaysians household. The second one is Media Prima. Media Prima is Malaysia's leading fully integrated media companies with a complete repertoire of media-related business in televisions, print, radio, out-of-home advertising, content creations, and digital media. The third one is Digi.com Berhad, which is a mobile communications service provider in Malaysia that provide a variety types of mobile service such as voice under their prepaid plan and postpaid, SMS, data plan and services, international roaming, international calling cards, and wireless application protocol (WAP) services. And lastly, from Axiata Group Berhad, is one of the leading telecommunication groups in Asia to pursue a vision to be next generation digital champion by 2024.
Assalamualaikum everyone. My name is Nurdiana binti Sangkula from NBO2A. My student ID is 2020804106. Today I would like to present about the financial analysis under the liquidity ratio. According to our assignment, I will only present 2 ratio under the liquidity ratio, which is current ratio and quick ratio. Okay, for the current ratio, it's a measure of short-term solvency and indicates the extent to which the claims of short-term creditor are covered by current asset. Average current ratio is approximately 1.5. As you all can see in the graph, the current ratio analysis showing that Media Prima Berhad reflect the ability to pay short-term obligation on time for the 3 years consecutively from the year 2018 until 2020. Okay, next is quick ratio. Quick ratio is also known as acid test ratio. Ratio with less than 1.0 is not uncommon and it should not cause any alarms. As you all can see in the graph, the current ratio analysis showing that Media Prima Berhad as well reflect the ability to pay short-term obligation without rely on their inventories for the 3 years consecutively from 2018 until 2019, other than the 3 companies which is Astro, Digi and Axiata. Thank you.
Assalamualaikum and hi, my name is FARAHIN binti Muhammad SHARIF. I will explain about the leverage ratio. The purpose of leverage ratio is to measure first the firm's financial structure, second the extent to which the firm is levered by debt, third the ability to service its debt, and fourth the degree of financial risk inherent in the financial structure. Higher degree of indebtedness will result in higher risk as it indicates that the firm is subject to higher fixed obligations. Higher risks are associated with higher return. With proper use of debt or leverage, the firm will be able to get more profit as the cost of debt is cheaper, interest is tax deductible, and the firm finances its activity with less equity, and any profit will be appropriated among relatively few stockholders. This will result in higher earning per share. There are 3 types of leverage ratio. First, debt ratio, second, debt to equity ratio, and third, times interest earned, TIE. But in this presentation, I will explain 2 only, debt ratio and times interest earned. First, debt ratio. Debt ratio is to measure the proportion of the firm's total debt to its total asset. Indicates the amount of debt in the financial structure. Higher percentage is associated with higher risk. Important to analyze the long-term financial risk of the company. The formula of the debt ratio is total debt divided by total asset. Higher ratio reflect the higher amount of debt to finance asset. Okay, look at the graph. It is debt ratio for Astro Holdings Berhad, Media Prima Berhad, DG and Axiata Group for the year 2018 till 2020. As we can see, in 2018, Astro has the highest debt ratio, which is 90.50%, followed by DG 89.15%, Media Prima Berhad 38.19%, and Axiata Group 19.58%. For the year 2019 and 2020, DG has the higher debt ratio and followed by Astro, Media Prima, and the lowest is Axiata Group. Next is times interest earned, or TIE. TIE is to measure the ability of the firm to pay the interest charges applied on the debts used, represent the margin by which the firm's EBIT or EBIT can decline before the firm has trouble in meeting its interest obligations. Higher ratio is desirable as it indicates higher margin of safety. Okay, this is graph of TIE. Also shows for the year 2018 to 2020 of Astro, Media Prima, Axiata, and DG. Astro has the highest TIE ratio for 2 years consecutively from 2019 till 2020, and followed by Media Prima as the second higher ratio in 2018 and till 2019, but the lowest ratio in 2020. For DG and Axiata also get the lower ratio 3 years consecutively.
Moving to my next slide, which is activity ratios. Activity ratios indicate how efficient the manager utilize the available resources in order to generate sales and its contribution toward the achievements of the firm goal, which is to maximize the shareholder wealth. Average collection period is to determine the average length of time taken by the firm to collect their debt from the credit sales. And to get this amount, we need to know the firm's account receivable that relates to the firm credit policies and divide by sales per day. Highest ratio indicates that the firm has a problem with collecting their debt. From this graph, we know from 2018 until 2020 shows that Astro is good in collecting their debts, but vice versa with Media Prima, as they're having difficulty to collect debt with the highest ratio among others. Although DG shows the highest SCP in 2018, but DG have improved their collection debt by decreasing collection periods from 2019 to 2020. Same goes to Axiata, as their graph shows that slightly decreasing number of collections. Total asset turnover is used to measure the firm's ability to manage all of their resources invested to generate their sales. Higher ratio is preferred as it indicates that better efficiency in managing the resources or the management control over its investment in asset. Highest ratio also reflects the effectiveness of total asset to generate their sales. Total asset turnover can be calculated by dividing sales with the total asset. Now, from the graph in 2018, DG have the highest total asset turnover, followed by Media Prima, Astro, and lastly Axiata. But in 2019 and 2020, Astro preceded others with the highest amount of total asset turnover with 0.8, but different case for Axiata, as it lead as the lowest total asset turnover with 0.3.
Assalamualaikum to everyone. My name is Muhammad AZMI bin KHAMSAH. Today I would like to continue explain for activity ratio for Astro, Media Prima, DG and Axiata Group. In this slideshow, I will explain about profitability ratio, which is net profit margin and return on asset. Net profit margin is measured after tax profit per ringgit of sales. The highest ratio is better as it indicates of higher ability of the firm to obtain profit for distribution to the equity holder and internal source of financing to support normal growth. And the highest ratio indicates better income to shareholder. The formula net profit margin is earning after tax divided by sales. Based on the graph, DG get more highest percentage in 2018 compared with Esro, Media Prima and Axiata Group. Even than that, the percentage of DG is decreased, which is data 3 on the graph is 2018 is 23.16%. In 2019 is 22.75% and 2020 is 19.84%. While percentage for Esro, Media Prima and Axiata Group is not equivalent. And then what we can see the return on asset. Return on asset also known as a return on investment. It measures the overall effectiveness of management in generating profit with its available asset. And the highest ratio indicate a higher return on a firm asset is investment. Let's see on the graph is showing for percentage for Esro, Media Prima, DG and Axiata Group in 3-year data, which is 2018, 2019 and 2020. In return on asset, the percentage of DG are decreased from 2019 to 2020. The percent of DG is more significant decrease from 2019 to 2020 as much as 3%. And another percentage is return on the asset, which is Esro, Media Prima and Axiata Group also not equivalent. Okay, thank you.
Hi again. Next, I will present about the market ratio, and according to our assignment, I also will only present two ratio under the market ratio, which is dividend payout ratio and the price earning ratio. First is a dividend payout ratio. It's a ratio that indicates the amount of current earnings available to common stockholders paid out as dividend. And as you all can see in the graph, the dividend payout ratio, the different company provides an idea of how well earnings support the dividend payment. For the year 2018 and 2020, it's a DG.com Berhad, while in 2019, it's a Media Prima Berhad. Next ratio is a price earning ratio. It shows the relationship between the market price of the company share and earning per share. It indicates the investor preference of the company share with respect to the earnings available. That is how much the investor are willing to pay for each dollar of profit generated by the company. As you all can see in the graph, the price earning ratio is showing that Axiata Group Berhad indicates the firm's market price is overvalued for the 3 years consecutively from 2018 until 2020. Thank you.
And the last part is conclusion. As a conclusion for liquidity ratio, we can conclude that Media Prima Berhad has the highest liquidity ratio for 3 years consecutively from the year 2018 till 2020 rather than Esro, DG and Axiata Group. Next, for the leverage ratio, Axiata Group is efficient in handling debt ratio since it has the lower debt ratio for 3 years consecutively. Esro Holding Berhad reached the highest ratio of time interest earned in 2019 and 2020, while in 2018, Media Prima reached a highest ratio of time interest earned. Furthermore, Esro Holding Berhad is more efficient in collecting debt since it has the lower average collection period, but for the total asset turnover. Esro reached the highest total asset turnover in 2019 and 2020 only. For year 2018, DG is the highest in total asset turnover ratio. Moreover, for the profitability ratio, DG has the highest operating profit margin and return on asset for all the 3 years. And lastly, the market ratio. Astro giving the higher dividend in 2019 and also give a good lower value for their investor. Thank you.